A very pleasant evening to all of you and very warm welcome to this webinar. Firstly, I would like to extend a note of thank you to everyone for becoming part of this session and gracing it with your presence. I am Sarish, member of Corporate and Allied Laws Committee of Karnataka State Chartered Accountants Association and your MC for the day. It is my pleasure to welcome each and every one of you to the most awaited event, Preparatory Framework for an IPO by Private Limited Company. In this webinar, we are going to understand overview of IPO journey and basic understanding of IPO framework in case of private limited companies. This webinar covers practical application focused real life illustrations with comprehensive learning experience. I also extend my thanks to KSSCAA Women Empowerment Committee and the event organizer for their enormous cooperation in organizing this event. Before we start our session, I request President of KSCAA CA Pramod Srihari sir to address the participants. Over to you, Pramod sir.
Good afternoon, participants, and welcome you to the Preparatory Framework and IPO by Private Limited Company program. This is the second or third event of Women Empowerment Committee, and I can really see two women speakers waiting, both who are eagerly waiting to share their knowledge to us. I'm very glad that we are seeing this day where Women Empowerment Committee has a full women speakers, and there is jointly done by a corporate law committee. And congratulations for both the chairmen on this. We have seen an unforeseen precedence in IPO, which is happening, which was initially only for some of the very big listed companies. The day has come near to us where even the private limited companies, where the smaller companies are also today aspiring themselves to be listed, and they want to grow. Rather, if you study some of the shareholders agreement of some of the startups, majority have their exit clauses with an IPO. So the aspirations of startup has always been to go on IPO, and this program would encourage all the professionals to see as to what is there in it, what is that they can learn from a program like these. I'm sure there are a lot of intricacies in it. There are some advantages, while it comes with a good amount of responsibility as well. With that said, I just brief as to what KSCAA is. KSCAA is a 67-year-old organization of chartered accountants, and we have around 3,800 members across. And while we don't differentiate between KSCAA members and non-members, our members in Karnataka are somewhere around 17,000. So we have a good base, and we have always been in the forefront of putting across the voices of chartered accountant to all the authorities. We have done it for to Ministry of Corporate Affairs. We have done it to Ministry of Finance, and we have also been fructified by some of the results where the representations have been heard, and they have given some of the favorable outcomes of the representation of us. We have an upcoming program which is called as the Growth Mindset for CAs, which is happening on 26th, 27th, and 28th of May in Bandipur. Now, this is a very interesting program for chartered accountants, because while we all can have the domain and functional expertise, if you don't have a mindset of growth, we don't grow further. And that's the intent why we have kept it. Some very interesting things like what are some of the biases we have kept? Why is that we are so risk averse? What it takes to grow is all what we are, we have put in a lot of efforts to bring out some case studies. So those of you who participants are there, you can please join us on 26th, 27th, 28th. I will also post the link of the registrations in the chat box, and hope to see you there, and hope we all grow together. That is also the theme in which we started this year, which is create and complement. Let's all complement with our knowledge and grow together. I don't want to take much time. We've already lost 7 minutes past 4 p.m. I'll hand it over to the MC to conduct the program. Thank you. Enjoy the feast of knowledge.
Thank you, sir. Now moving on to today's speaker, it gives me immense pleasure to welcome today's first session speaker, who is none other than Ms. Pracheta M from Bengaluru. Ms. Pracheta M, a practicing company secretary, is a fellow member of the Institute of Company Secretaries of India and an associate member of Institute of Chartered Accountants of India. She is a BCom graduate with an honor of being the topper of the University of Mysore. She was also a pioneer in bringing ranks at ICSI examinations to Mysore chapter. As a company secretary, she has around 13 years of experience in the corporate laws and is serving as consultant to listed and unlisted public companies, private companies, LLPs, and trust at Mysore. She has served as secretary and vice chairperson of the Mysuru chapter of the ICSL. She was also a member of the Auditing Standards Board constituted by the Institute of Company Secretaries of India for 2 years and is presently a member of the Expert Committee of Auditing Standards constituted by the ICSI. Also had been a member of Women Empowerment Committee of KSCAA. She also been faculty for the students of ICSI and ICAI. She has also been a speaker at seminars conducted by the Mysore branch of Institute of Chartered Accountants of India, Karnataka State Chartered Accountants Association, and ICSI Mysore and Bangalore chapters, and has addressed the professionals on various aspects of corporate laws. Ma'am, we are truly blessed to have a versatile personality like you in this program, ma'am. We also seek to have your association with KSSCA in the years to come. Now I request Pracheta ma'am to please take over. Over to you, ma'am.
Thank you so much for that warm introduction and welcome. A very warm good evening to all the members who have present here to enjoy a learning experience. Learning is always an enjoyable experience, is my belief. As the president of the KSCA mentioned, we all grow together is a theme. So in this journey of IPO, not only the corporate entity grows, all the stakeholders involved grow together. So here we are today to experience how we all can grow together and help the corporates to go in and explore the various aspects of the stock exchange and primary and as well as the secondary market. So I am now sharing my screen. Is it visible?
Yes, we can able to see you, ma'am.
Yeah, thank you so much. So let me start with this quote, which is very famous. A journey of 1,000 miles starts with a single step. Right? So this journey of IPO for various corporates has started with certain steps which they have taken. My favorite author, Robin Sharma, says, and a professional was an amateur at once. So I have now taken, is the screen moving?
It is not. We are still on the slide one.
It's not.
Okay, thanks. So it's not moving. I'll just retry. Okay, so I have 3 corporates examples. I am sure I have been told that I may not be able to see all the participants, but I can see the chat boxes. Therefore, please do respond. Let this not be a single way communication. Let us have 2-way communication through chat box. So can anybody guess which company I was talking about? Now this company got incorporated in the year 2000 as a private company. Initial capital was just rupees 200. Some 20 shares were invested of rupees 10 each face value. And the issue size, when they went for an IPO, the issue size considered to be one of the largest IPOs was around rupees 18,300 crores. So if you can identify this company, please do message in the chat box. Also, the question I had in my mind was how there can be 200 rupees as the paid up capital for a private limited company, whereas earlier we had 1 lakh as the minimum capital, right? So this is one question which I have in my mind. If you know the answer to this also, please do put it in the chat box. Okay, I can see that it is somebody has responded. Yes, Madhavan, Anupam, Anup. Yeah, it is Paytm, right? So this company started with just 20 rupees as the paid up capital, and now they have gone for this issue. So they have started from small to a chain. This is another company which started with a paid up capital of rupees 1 lakh because it was incorporated in 2007. Minimum capital was 1 lakh rupees. And the issue size was around 130 crores. Another company sorry. Yeah. Another company again was a partnership firm which was there, which was as a partnership firm and got converted into a private company in the year 2030. The capital was around 1 lakh. The issue size was 12 crores. So with these three examples, I wanted to bring about whether it is thousands of crores or hundreds of crores or even a few crores. The Indian market, primary and secondary market, are open for corporates and they can decide what they want to do. So this is the IPO. This is the primary market which we have in India. So for various, it caters to all the sizes and establishments. Now the major question, why IPO? I think most of us know the answers to this, why IPO is required. The first thing is it opens up to various, a very big market for raising funds, raising the capital, equity capital especially for various corporates. The other advantage is once we are listed entity, the public image, we are able to build our brand image. So this is another reason why IPO is preferred. Value assessment, basically whatever shares are traded, that would decide my market cap. So that is a kind of assessment of the value which the market looks at to my company, to my corporate. So that will again help me to grow better in terms of value and branding. Enhanced credibility. Since I'm a listed entity, I am bound by several regulations and various corporate governance norms. So that will increase my process in the organization, and therefore in the market, the credibility is increased. My financial results have more credibility when compared to unlisted companies. It's a very important option. As the president was mentioning, we have the SHAs which mention about exit option. So exit option for various investors can be provided through the IPO. So these are some of the reasons why an IPO is preferred nowadays. The very first step with respect to an IPO by a private company is definitely to get converted into a public company. Now, why do we need to convert to a public company? Can I have some answers in the chat box? Why do we need to convert into a public company? My question on that 200 rupees still remains. I don't see any answers on that. Anybody gets to know the answer, please do put it in the chat box. So now statutory requirements, basic, okay, conversion to private company from public company is a statutory requirement. Okay. Compliance is more for public company. Private limited cannot issue shares to public. Okay, nice. Then raise to money from public. Okay. But why? Why can't a private company do that? Allows free share transfer. Great. Capital requirements to growth, SEBI regulations. Okay. So let me put it here. We know that the section 2, subsection 68 of the Companies Act defines a private company. Now, what is a private company? A private company is a company which by its articles of association provides for certain things. There are three very, very important things in a private company. So that one is the restriction on the transferability of shares, which somebody mentioned. Yeah. Somebody mentioned that there is a restriction on the transferability of shares. So if we have to go to shareholders or the general public, we should allow them to freely transfer the shares, right? Therefore, that is one hindrance if we are a private company to go for any public issues. The second one is the limitation on the number of shares, which has been mentioned by one of the participants. The limitation is restricted. The number of shareholders is restricted to 200. So therefore, if we are going for a mass, then we cannot compel or we cannot restrict the number of shareholders. So that therefore, that is another hindrance. The very important is the prohibition of the issue of shares or prohibition to go for public for raising of any kind of shares. So that is one difference between the old act and the new act, where we had only shares. There was prohibition only on issue of shares. So other non-shares like debentures could have been issued to the public by a private company, but that is not the case now. So you cannot invite the public to subscribe any kind of securities, including debentures, as per the new act. So because of these restrictions, it is not possible for a private company to issue shares in the open market or in the primary market. So therefore, we have to go for conversion. Now, the process of conversion is quite simple. The private company to public company is not a very complicated procedure as such as per the Companies Act. Whereas the vice versa is little complicated because we need to take the approval of the regional director, central government or regional director as the case. So that therefore, what is the process? This is a very simple process involved. Section 14 read with rule 33. So what we do, we need to convene the board meeting for approval of the alteration of the memorandum for the name of the company. Then also we need to take the approval of the board to convene an extraordinary general meeting of the shareholders. Then convene the extraordinary general meeting, pass a special resolution. Once we pass a special resolution, mandatory that we need to file the MGT 14, and for conversion application to the ROC, the form prescribed is form number 27. So there are essentially only two forms. One is form MGT 7 and form INC 27. These are the only two forms which are to be filed for conversion of a private company to a public company. So this is as simple as that. After the INC 27 is filed, the registrar of companies will issue a new certificate of incorporation consequent to the change of name, and the SIN number will change. Only those three words, PTC will change to PLC. Sorry, PLC will change to PTC, from public limited company to private company. So this is the change which will happen in the SIN. So we will get a new SIN in the certificate of incorporation. New certificate of incorporation with new SIN, but the change is only this. Not much of changes will be there. But INC 27 and MGT 14. Things to be noted is both require the certification of the professional, and MGT 14 in this case is a non-STP form. I'm sure most of you, all of us know that what is STP, non-STP. STP is one, as soon as we file, it is straight through process. So as soon as we file, it is processed. But non-STP form is something which is looked at in the back end by the regulator, and then approval is given. So MGT14 for this purpose, MGT14 for certain purposes, it is STP. For this purpose, where we are going for change of name, it is a non-STP form. So it needs to be approved. So the approval process or the form process requires certification from the professionals. Even the INC 27 also requires the certification from the professionals. So here we need to be very, very careful. And since we are certifying various forms, we need to understand what are the provisions. We need to see, have all the documentations in hand. Here, as I mentioned, the conversion is a very simple process. Only a special resolution is required. So as a professional, what is to be looked into when I am engaged for the purpose of this certification of MGT14 and INC 27 is to see whether a proper notice convening the meeting has gone to each and every shareholder. Since it is a private company, most of them is very closely held, and therefore we may not be very keen in seeing whether it has gone or not for other forms. But here, when it comes to conversion or any other certification of forms where we are doing the certification, I urge everyone to see whether a proper notice has gone, whether there is a proper proof of sending the notice by the company to its shareholders, whether all shareholders have been sent the notices, whether the EGM was properly convened, whether we have the proper attendance register, attendance slips, and whether the minutes has been properly documented. So these things have to be checked, whether there was an VC meeting, OAVM, if that is so, whether the circulars have been complied with. So these are some of the things which, as a professional, we have to see before certifying these forms. So next, the process is simple, but what goes before this process and after this process is little. These are some of the things which we need to focus more on. MGT14, as I mentioned, is a non-STP form. So once we are filing the INC 27, we have to ensure that the MGT14 is approved. Unless it is approved, the form we will not be able to fill. Now here is a glitch. One, we all know that MGT14, can anybody type in chat box, within how many days we are filing the MGT14 whenever we pass a special resolution, or for that matter board resolution for various purposes? When are we filing? Within how many days are we supposed to file the MGT14? Can I get any responses in the chat box, please? Within 30 days. Good. So we know that within 30 days it has to be done. How many days we have to file INC 27? Any idea on that? Within how many days INC 27 has to be filed? 14 days? Closer. 1 month. So 30 days, 1 month. Yeah. Okay, some are saying it in 15 days. Correct. So the MGT14 should always precede the INC 27, and INC 27 has to be filed within 15 days as per section 14. Therefore, we should be very, very cautious that we cannot take time in filing the MGT14. As soon as the special resolution has been passed by the company, by the shareholders, for conversion of the private company to public company, it is important that we file immediately so that it is approved within 15 days and we are able to file the INC 27 within the time given by the statute. So this is very, very important point which we have to keep in our mind. Otherwise, you will again have to go to central government for condonation of delay, and that takes a lot of time and energy. So that is very important point which we have to consider. The second important point is you should ensure before you go for conversion, please go back and see whether any form is pending for approval. If even a single form is pending for approval, the INC 27 will not be approved or will not be able to file also. So that is another important point which has to be kept in mind before we go for this process of special resolution. Then there is the composition of the board. I'll come to these other 4 points: composition, key managerial personnel, dematerialization, and various committees. So these are very, very important points which we have to consider before we go for conversion or immediately after conversion. No, am I missing an important point or compliance here? What is the basic requirement of a public company when compared to a private company? What is that one change which you have to do? Alteration of capital is one. Number of directors, yeah, that has been covered in the board composition. I'll come to that. Free transferability is alteration of articles which the shareholders have done. What else? Members to be increased. Kudos. Yes. So that is what I was expecting. We have to increase the number of members to 7. So this compliance I have not included in my previous table. So this has to be done. I would say this has to be done before we are going to the shareholders for approval for alteration of the memorandum and the articles of the company, right? So now going to various other concepts which I discussed. The composition of the board. As rightly mentioned by one of the participants, the minimum number of directors has to be increased to 3. Now there is a question again, when these compliances have to be done, whether we have to do before the shareholders approval can be obtained or after the shareholders approval is obtained. See, once the company is going for INC 27, immediately once it is approved to be a public company, the compliance with various public company compliances starts immediately. So therefore, it is always advisable that before the shareholders approval, we are going for shareholders approval, we take care of various public company compliances like increase in number of shares, like increasing the number of directors. Also, appointment of independent directors. In certain cases of companies, we need to we need to appoint independent directors. Also, certain public companies need to have women director. We have to ensure that there is a proper rotation of directors, and we have non-executive proper required number of non-executive directors, non-executive independent women director, and rotation of directors. These are some of the very important points which we need to consider, because as soon as we become a public company, there is no breather or there is no time available for us to comply with these. So that has to be taken care at the earliest before we go for conversion. So now non-executive directors, in case of public company, we need to have the board composition needs to be minimum non-executive directors, 50% has to be non-executive directors. So that has to be taken care of. Now coming to the, generally we see private companies are mostly husband and wife companies or family owned companies. So non-executive director induction plays an important role. Coming to the independent directors. Companies, public companies with a paid up share capital of 10 crores or more, or a turnover of 100 crores or more, or an outstanding debt. Debt includes your loans from banks, debentures, and deposits. To be, if they exceed 50 crores or more, 50 crores, then it is important that two independent directors are to be appointed. So this, since we are discussing about IPOs, what we are presuming is that the companies which are now going for public conversion are those which have IPO plans in the future. So obviously the IPO requirements, which I come to later for SME listing also, is the post-issue capital, paid up capital should be minimum of 25 crores. So we actually fit into this. So every company which is planning to go for an IPO and for that purpose it converts into a public company, obviously the capital is more than 10 crores. So therefore, these companies should ensure that independent directors are appointed beforehand and proper compliance has been considered. Now, coming to the women director. So women director requirement on capital is very huge, 100 crores. But turnover, if the company has a turnover of 300 crores or more, based on the previous audited balance sheet, and now it is becoming a public company, from day one, it is necessary that a woman director has to be there. So this requirement is again important. So please look into your previous financials, and if the turnover is exceeding, or if the capital is also more than 100 crores, which I am not sure for SME listing though. So that companies, they have to appoint a woman director before they go for public conversion. So one women director. Now I have a question to the audience again. Should the women director be an independent women director? What is your answer? No. No. Okay. Anyone has a different opinion? Need not be a women independent director? Not required to be ID. Okay, fine. No. Okay, fine. So agree that independent director, sorry, women director need not be an independent director. This is applicable only to top 1000 listed entities based on the market cap. From 1st April 2020 onwards, they need to have an independent women director. So if we are not, obviously we will not be in the top 1000, we need not have a woman director who is independent woman director as per the Companies Act, right? Okay. So now we have rotation of directors. Now this is an important aspect to be considered when you're changing the articles. If you look at most of the private companies articles, we have permanent directors. You would have mentioned these are the directors who are permanent directors and they will not change, something like this. So these points need to be looked into in the articles of association. So out of the total strength of the board, 2/3 of the directors should be those minimum. This is the at least 2/3 of the directors should be those who are liable to retire by rotation. And out of these 2/3, 1/3, nearing to 1/3, shall retire at every annual general meeting. So this composition also needs to be looked into once we are approaching to become a public company. Also, if the company is going for a main board listing, especially, whatever compositions we are talking about, it has to be in line with the listing regulations also. So based on whatever requirements are there in the listing regulations says same 50% non-executive directors, and if the chairman is executive director or related to a promoter, 50% has to be independent directors. So not only that requirement of 2 directors, it is also important to see what is my total composition of the board and who is my chairman of the board, whether he is related to promoter, whether he is executive, non-executive. All these things have to be considered to determine the number of independent directors in the company. So this is with respect to the board composition. Now we move on to the key managerial personnel. Now every company which has a paid up share capital of 10 crores or more, irrespective of whether it's a public or a private company, we know that they need to have a company secretary. Now a public company, once the company becomes a public company, and as we discussed, we are presuming that these companies are going for either SME listing or main board listing, then obviously the capital is more than 10 crores. So therefore, they need to have all these 3 categories of KMPs. There is no exemption. They cannot say we have one of these KMPs. It is necessary that all the 3 categories of KMPs have to be present. And this requirement, again, as I mentioned, from the day 1 of the company becoming public company, it will be applicable. So the first requirement is, first category is managing director, CEO, manager, and if none of them are there, then a whole-time director. So either one of them, either there must be a managing director, or there must be a CEO, or there must be a manager. If none of them, there must be one whole-time director. So this is a minimum requirement. So either amongst these four, one is sufficient. Then another second one is the company secretary. And the third one is the chief financial officer. So this has to be complied with before we are approaching for conversion to a public company. The next one is with respect to dematerialization of shares. Now, you may be aware that all unlisted public companies should have ISIN, that is International Securities Identification Number. So every public company, unlisted, has to, as per the Companies Act, of course, listed, they need to be in demat only. Unlisted public companies also need to have the shares in dematerialized form. So issue of shares can happen only in dematerialized form. If the company is going for any buyback or rights or bonus issue, then promoters, directors, and KMPs should have ensured that their shares have been dematerialized. If a member of the company wants to transfer any of his shares, then it has to be only in demat form. So if he has to transfer the shares, it has to be converted to demat or transferred to demat, and then only he will be allowed to transfer the shares. Similarly, if the member wants to subscribe to any rights or any private placement by the public company, then also he has to ensure that his shares are in demat form. So this is a requirement, and of course, every half year, the public company has to file PAS 6. Sorry, it is wrongly typed as PAS 3. It is PAS 6. So PAS 6 has to be filed within every half a year, within 60 days from the end of the half year. So that has to be done by the public companies. So this is a requirement. Now the question is, demat should happen before or after? So I leave the question to the audience. Dematerialization of shares, should it happen before the conversion or after the conversion also? Can we go for dematerialization? So we get a response, it has to be before, done before, okay, before the conversion, okay. Okay, so one of my professional friends was suggesting that we can go for the demat even after. Before, if it is done, fine, but we can do it even after we have done, but we should ensure that we are not in the deadline of filing that PAS 6. Also, it has to be done immediately, as early as possible. The only advantage if you're doing after the conversion is that the name of the company has to be again changed with the depositories. If we are private company and we get the ISIN, and then we become a public company, so there is a name change because of the word deletion of the word private. So that name change, again we have to, another process we will have to do it. So it is possible, but it has to be done immediately after conversion to public company. So this is an opinion given by one of my friends. Okay, so I have a next question is whether we need to register with both the depositories, NSDL and CDSL, or is it okay that we go with one of the depositories? Any answer? One is sufficient. Okay, one is sufficient. One, okay. So coming to the unlisted public companies, the answer is right, what we have said. Any one is fine, but if we are planning for an IPO, which is our case right now, either SME or main board, it has to be registered with both NSDL and CDSL. So that is another point which we have to consider. So if you're going for conversion because of the listing issue, then you better go for conversion or registering with both the depositories. If you're not going for listing, One of them is sufficient. So unlisted public company. Now, coming to the committees of the board. So as we discussed about the composition of the board of directors, the committees which have to be formed also, in my opinion, have to be complied with before the conversion, because from day one again we have to comply with the committee formations, the all the references of the committees, etc. So as we all know, there are two important committees which we have to consider. Can I have it in the chat box? What are those two committees? One I've already displayed. What is the other one? Audit committee, yes, I've already displayed. NRC, okay. How about CSR? Do I have to stakeholder relationship committee? Okay, for a public company, stakeholder relationship committee, as soon as it becomes a public company, is it mandatory? Okay, is a question mark. We can look at it later. CSR, yes, if 135 attracts. Now, CSR and public company, is it related, was my question. Nomination committee, okay. So no. So CSR committee I'm not considering here because it is irrelevant whether you are a public company or a private company. CSR committee is mandatory if you fulfill those three conditions, any of those criteria for the CSR. So what we are looking at is other committees. So applicability of audit committee, the companies, every listed public company that's there, public companies with a paid up share capital of 10 crores or more, and public companies which are having a turnover of 100 crores or more, public companies having aggregate outstanding loans of 50 crores or more. So these companies need to have whatever the independent director requirement was there, a similar requirement is there for audit committee. So those companies which fulfill the which fit into that independent director requirement have to have the audit committee as well. So role of audit committee as per Companies Act. So these are some of the roles which as an auditors, most of us already know. Examination of financial statements, evaluation of related party transactions is a very, very important aspect which the audit committee does, especially if we look at LODR. LODR says audit committee has to approve the related party transactions. Even under Companies Act also, it is approval of the related party transactions is done by the audit committees. When it comes to financial statements, they are only reviewing and recommending. When it comes to auditors' salary remuneration, they are only recommending. When it comes to other aspects, internal auditors appointment, etc., they are only recommending. But when it comes to related party transactions, actually the audit committee is approving. One more important aspect which I wanted to mention here with respect to related party transactions for listed entities is that the audit committee, only independent directors of the audit committee can approve the related party transactions. No other member of the audit committee can approve. So like if it is he's a non-independent director, non-executive also, he should not approve as per LODR. So this is one important aspect which we need to keep in mind. Then, okay, scrutiny of intercorporate loans and investments is another very important aspect. Most of the, as we all know, most of the Companies Act provisions have been decriminalized. But this one, section 186, and there are a couple of other sections, of course. These are some of the sections which are not yet been decriminalized. So therefore, very, very important aspect is that when we are looking into giving any kind of loans to anybody, not only related parties, 185 at least is not non-bailable non-compliance, but 186 is very serious. So that has to be looked into very seriously. So these are some appointment and remuneration of auditors, etc., etc. So these are some of the reference the aspects which the audit committee looks into. So here I've given a small comparison of audit committee as per Companies Act and the LODR. So minimum 3 directors, both cases. Majority independent directors sufficient, but here it should be 2/3 of the independent directors. Majority should have the ability to read and understand, but here it says all the members should be financially literate and one should have the expertise. Chairperson shall be an independent director. Also, it's important to remember that the audit committee chairman, the nomination committee chairman attend the annual general meetings in case of listed entities. So this is about the audit committee. Now going to nomination committee, almost the same requirements. When it coming to the comparison of the, when it reference what does a nomination committee does, basically it is for approval or rather recommendation of the directors and the senior management of the company, remuneration, approval of the remuneration, approving the nomination and remuneration policy. So these are some of the aspects which nomination and remuneration committee does. So the difference is again with respect to independent directors. So here it says majority can be independent directors. In case of LODR, it is 2/3 should be independent directors. Chairman can be a non-executive director, but chairperson has to be an independent director in case of listed entity. No requirement on the frequency, though it is not mentioned how many meetings and all that has to be done, but one meeting every year has to be done as per the LODR. In case of audit committee, for listed entities, 4 meetings. So again, there is no such requirement under the Companies Act. Okay, so this is broadly we have discussed. Criteria for independence. Yes, this is one more important. Formulating criteria for determining qualification, positive attributes of independent directors. Evaluation of the board. This is another important aspect which we see in the listed entities. Very, very important in case of listed entities that evaluation, board evaluation is a very big important concept which is to be done. And in private public companies also, evaluation plays an important role when there is a reappointment of the independent directors. We know that the term of the independent directors is 5 years at once. Maximum tenure is 5 years, and they can be reappointed for next term of 5 years based on evaluation. So that is provided in Schedule 4 to the Companies Act. So unlisted public companies also, evaluation, board evaluation becomes very important, especially evaluation of the independent directors. Stakeholder relationship committee is applicable for unlisted public companies only if the number of shareholders, debenture holders, or any other security holders exceeds 1,000 members. So if it is not a listed entity, shareholders relationship committee is not mandatory if this requirement is not fulfilled. Similarly, other committees also, if the requirements have not been fulfilled. But when it comes to listed entity, irrespective of the number of members, whether it is shareholders or deposit holders or debenture holders, every listed entity should constitute a stakeholder relationship committee. Basically, the purpose is to review or look into the grievances of the investors. So that is the basic purpose with which stakeholder relationship committee has been formed. The differences: chairperson shall be non-executive, same in both the cases. Maximum and minimum number has not been prescribed. Nothing has been mentioned about how many members should be there. It only says one should be independent, non-executive, and other things board can decide. But here in case of listed entity or LODR, 3 directors must be there, 1 should be independent, and 1 meeting every year. Again, frequency is not mentioned in case of in the Companies Act. So this is broadly about the committees. So this is just to checklist for post-conversion requirements. Need to change in my PAN. Need to change my stationery. Also need to remember that there is a contradiction. There is a contradiction with respect to mentioning of the name. So as per the Companies Act, if the name of the company has been changed for 2 years, it is required that they have to mention after the name previously so and so private limited. Like let's say it's XYZ private limited gets converted to XYZ limited. It will say everywhere, wherever it mentions the name XYZ limited, it will in the bracket also say previously called XYZ private limited. So there are certain difference of opinion where people say just because the private company has been dropped, you don't have to mention that. But I am as a professional, I suggest and I have been advising my clients to mention the previous name for next 2 years, like in all the letterheads, in your emails, signature, or in the invoices, everywhere, even on the name board of the company, everywhere I've mentioned that previously it was so and so private limited. So that is being mentioned. Update the bank account details, inform all authorities about conversion, then get a copy of MOA, AOA. Okay, one more important point which I missed to mention with respect to MGT 14 is that earlier we used to have the MGT 14 attaching the MOA and AOA, but now in the V3 version, it is EMOA and AOA. So we will not be able to attach any former formats. So we have to prepare, like it will take us to the EMOA, AOA. We'll have to file the EMOA, AOA with respect to the name change. That is one change with respect because of the V3 movement of the MCA. Now, this is with respect to companies which have gone for public conversion. Now, companies which plan to go for IPOs, either in SME or with respect to the main board listing, there are certain policies which are mandatory to be informed. SIN is also used. I think I didn't get the question. SIN is also used, can be elaborated. Okay, or we can have it in the later. Mandatory policies. Now, there is one policy which has been already applicable once the company becomes a public company. What is that policy? Once the company becomes a public company, there is one policy which has already been made mandatory. CSR policy. Which is that policy which is already applicable whether you go for listing or you are not going for listing. Okay, so should I reveal the answer? I'm expecting. Okay, so it is the nomination and remuneration policy. So whether you are an unlisted company, listed company or unlisted, as soon as you become public company, the NRC policy is mandatory. So that's the reason okay, it's there. So NRC policy is mandatory, but you need to ensure that it is in line with the LODR if you are going for listed entity requirements. So policy on related party transactions. So this is very, very crucial policy in case of listed entities. Almost all policies are crucial, but related party transactions is all the more crucial in case of listed entities. So a policy on how we are going to deal with related party transactions, what is materiality for you in terms of related party transactions, what can be subsequent modification, what is material modification for you. All these are very, very important with respect to related parties policy. These things have to be disclosed in the policy on related parties, policy on determining materiality. Now, in case of listed entities, regulation 30 of the LODR requires that there are certain events in the company which you need to immediately intimate to the stock exchange. For example, and if I take one example, change in directors. So what do we do as a unlisted public company? It is like we have 30 days time to sit around say and last day we take DL2 and file all that. But when it is a listed entity, immediately within 24 hours of appointment of director, it has to be intimated. So that is considered as a material event by the listing regulations, by the SEBI. That has to be intimated by the company to the stock exchange within 24 hours. So this is one example. Like that, there are hundreds of events which are considered to be material events. So a company with a turnover of 100 crores enters into a very big project of another 100 crores. right? So that is a material event which it needs to disclose. A company of a stature like a Reliance, which has several thousands of crores of turnover, enters into some 50 crores of agreement. It may not be material for that. So therefore, what is material for me may not be material for another company. Therefore, we need to have a policy on materiality. When do we consider the company? When it considers what event is material. Certain transactions, it has already been prescribed by the SEBI or LODR, but certain things have been left to the company, and that has to be decided in, we have to put it in the materiality policy. Then policy on whistleblower. Whistleblower is another very important aspect which is coming up. SEBI looks into this whistleblower very seriously. So what is whistleblower policy? Once or vigil mechanism also we call it. If somebody has some grievance or something, so if once they put it to the higher ups, it should be ensured that that person is protected. So what is the policy for protection of such persons? How do you deal with such situations? So those things are mentioned in the whistleblower policy. Retention, website document retention, for how many years you keep these documents, then after how many years you move it there, what are permanent records, what are those which can be destroyed. So all these archival policy should be in place. Then code of conduct for disclosure UPSI. So this is another important aspect with respect to insider trading regulations. So how do we deal with dissemination of the unpublished price sensitive information, UPSI? That is a big policy which is given in the prohibition of insider trading regulations. So that is another policy. So these are some of the dividend distribution policy for certain companies only. Not all companies need to have dividend distribution policy. So these are some of the policies which have to be kept ready before the company is going for the process of IPO. So not necessary that every public company has to have these policies. But once we are planning for filing the draft red herring prospectus, then it should be ensured that these things are kept ready. So with this, I think we have completed with respect to the public company process. Now start moving. Okay. So SME listing, just quickly we'll just look into SME listing. It's exactly 5 o'clock now. So I'll take another 5 to 7 minutes. So it's a trading platform where small scale enterprises are allowed to trade their securities. Now, what are the features? I'll just look at few of them. The basic advantage for SME listing is there are a lot of relaxation in respect to eligibility criteria. We will see the eligibility criteria later. So there is a lot of relaxation in the eligibility criteria. DRHP need not be filed with the SEBI. Listing and trading continues on the SME platform, and it can move to, after 2 years, it can migrate to the main board also. Issued to be written 100% underwritten, and IPO grading is not mandatory. Then lot of relaxation with respect to compliances are there. So, okay, standardized lot size. So you cannot sell single shares, or there is only lot of shares can be, only a single lot can be sold. Minimum application size is 1 lakh rupees here. Then listing fees and annual fees, there is a lesser amount when compared to main board listed entities. The submission of financial statements can be half yearly instead of quarterly in case of other companies. Several relaxations are there with respect to LODR. All those which we discuss right now with respect to board composition for listed entities, with respect to audit committee, with respect to related party transaction, with respect to nomination remuneration, with respect to stakeholder relationship committee, with respect to secretarial audit, that is annual secretarial compliance report given under the LODR. So all these are exempt for SME listed entities. So lot of compliance cost is reduced for these listed these entities which are listed on SME stock exchange, though they are considered to be listed entities under the Companies Act and the secretarial audit and other applicable listed entity compliances are applicable, but LODR gives lot of exemptions. Also, SMEs that 25% mandatory shareholders public shareholding need not be complied with in case of SME listed entities. So when it comes to, so majorly we have two major players in case of SME listing. One is BSE SME platform and NSE Emerge platform. So the criteria is almost the same in both the entities. So the post issue paid up capital should not be more than 25 crores. So that is the basic requirement. And tangible assets should be 1.5 crores. The company should have a track record of 3 years. Mandatory website should be there. Mandatory trading in both the depositories. Like you should facilitate trading in both the depositories. That's the reason I was mentioning that it should be both the depositories. And there should not be change in the promoters for the preceding 1 year from the date of application to the BSE for listing. So this is a requirement under BSE. NSE almost the same requirements. Track records of 3 years. They also mentioned that there must be an operating profit out of 3 years, out of 2 years, out of 3 years. Then positive net worth must be there. It should not have been referred to BIFR, and no proceedings under IBC is going on. NCLT, there must not be any winding up petition with NCLT or court, and there must not be any disciplinary action by stock exchange or regulatory authorities the last 3 years. So these are some of the conditions, eligibility requirements by both BSE SME and NSE Emerge platform. This is just a process flowchart, which in detail will be taken over by my colleague CS Parvati. So this is a statistics which I could get from ICAI website itself with respect to the SME listing right now, or rather last year, 30th April 22. Yeah. So I just like to end this with this, that each one of us can think big, we can believe big, and we can act big, and definitely the results will be bigger. So with this, I'll hand over to the MC of the day. Thank you so much. Whatever questions are there, we can have it together after the session by Parvati, or however the organizer suggests. I'm okay with both the options. So we can take the questions right now. I'm ready, or we can take it later also. I'm ready.
Ma'am, we are taking questions at the end, ma'am, after the session is complete.
After the session, yes.
Yes.
Thank you so much.
Thank you, ma'am, for your thank you for the session you have done, and in your busy schedule you took some time for us, and we had a wonderful session and good insight on the topic IPO, because it was something very new for everyone, and thank you so much for all your experience in it. And now we would like to move to the second speaker.
Moving on to the second session, it gives me immense pleasure to welcome our speaker, who is none other than CS Parvati KR. CS Parvati KR is a fellow member of the Institute of Company Secretaries of India and holds degree in Commerce and Law from Mysore University. She also holds a master degree in Human Resource Management from Annamalai University. She is the Company Secretary and Compliance Officer of CNTLM Limited, which is a wholly owned subsidiary of Scient Limited, whereas she drives the contract management, corporate governance, secretarial and litigation management, and currently working on the IPO. She also coordinated to obtain various licenses to the company, including Defense Industrial License. She has over 13 years of professional experience as company secretary and handled various due diligence, customer audit, merger, MSIPs, and various corporate activities such as name change, shifting of registered office from one state to another state. She is actively associated with the ICSI Mysuru chapter from her student time and hold various positions from 2009 in the management committee. She was the chairman for the year 2020. During her tenure, chapter got national level first place in career awareness and third place in student month activities. She is the charter member of ICSI Mysuru Royal Pro Toasted Master Club and currently holding position of VP membership. She is also serving as a member of the editorial team of ICSI Mysuru e-magazine, which is circulating at the national level from past 20 years. Her interest includes gardening, writing poetry and articles, especially in Kannada, etc. Learning Sanskrit slokas and Shubhashita, etc. Ma'am, we are truly blessed to have a versatile personality like you in this program, and we also seek to you have your association with KSSEA in the years to come. Now I request CS Parvati KR to please take over. Over to you, ma'am.
Thank you, Mr. Suresh and KCA for giving me an opportunity to speak this wonderful topic and share my experience. And good evening to one and all, and namaste. Share my screen now. Hope my screen is visible.
Yes.
Okay, thank you. Yeah, as mentioned, I am working as Company Secretary and Compliance Officer for Cyan DLM Limited. And as a Company Secretary in employment, I would like to disclaim that the views and opinions expressed in this presentation are my own views and are subject to my understanding of the subject and do not necessarily represent view of the organization to which I belong or had belonged in past. No part of these presentations can be copied or circulated without prior permission. So, in today's agenda, what is that I'm going to cover is public issue, important definitions, parties agreement involved in an IPO, eligibility. Here in the parties agreements, very few I can take up. Eligibility criteria for an IPO and management activities for an IPO. KPIs means key performance indicators, pre-filling of offer documents and analyzing or pre-filing of offer documents, analyzing industry trends for an IPO. As all of us know, what is public issue? IPO, we must always, we will be hearing it is IPO, but what exactly? So what is that? It is a company raising funds by issuing or selling its equity shares to the public. As the previous speaker, Ms. Pracheta rightly mentioned, before going for an IPO, the company has to convert from private to public because it can take money from the public. It will not have any restrictions the moment it gets converted itself into the public. So, and in IPO, there are one is IPO, initial public offering is a process by which a private company becomes public company. Public when it starts selling its shares to the market for the first time. It is IPO. So in a lifetime of any company, IPO can happen only once. But company can raise funds for many times, but that will be called further follow-ups. So that is FPO. When a listed company wants additional capital, because when company wants for various reasons, it need not have to be only for expansion. It can be a working capital or various reasons, or repayment of funds or whatever reasons. When company wants additional capital after IPO, that will be called as FPO, and it can make for further issue of capital by way of fresh issue or an offer for sale. That means its existing securities will be offered to the public. That is the FPO. So IPO, normally the first time company will go for a public. Structure of the issue. So there are two types, as I mentioned. One is fresh issue. Issuance of new equity shares in the company and selling those newly issued shares to the investors. This is fresh issue and offer for sale. Because in IPO, the both can happen. A fresh issue, first when the company wants to go to the IPO, it even can offer its existing securities, then that will offer for sale. In there, the existing securities will be offered to the investors. Then the first and foremost thing, objective of the issue. So why any company wants to go for an IPO? So one thing all of us will be knowing in the offer document or DRHP, which will be available in the website, the objective of the issue. But as we are uh, analyzing why the company wants to issue money, then the very first thing what it has to do is why I want. Each company has to have a strong reasons to go for an IPO. Then proceeds of the issue utilization can happen in various stages or it will be disclosed. But the management has to take a very strong decision why I want those funds. So that is, for example, when in manufacturing industry, so various synergies will play a vital role in object for the issue. Management has to, because it now the private company or the public company which is not gone for an IPO, now the promoters will lose their stake and so many public will involved and there are multiple intermediaries will be there. So the company should be very, very careful or has to take a firm decision why I want to go for an IPO. What is my preparation for the IPO? Where am I? And that there exactly practically what happens is the promoter of the company will decide if it is 2 to 3 examples I'll give. One company will be holding subsidiary of a holding company, and there may be a difference in margin of the holding company and a subsidiary. When the consolidating, then there may be a situation where company will not be in a position to answer its investors or will not be in a position to show its synergies. One thing. Second thing, maybe a company wants to repay its debts. Company must have a potential growth depending on the sector which it is. Potential growth, and it wants to uh, repay its debts and use the money for the working capital. And third, depending on the current trend or the government policies or various internal and external reasons, companies have potential growth for expansion, and the promoters will think this can be the IPO can be one of the main reasons where we can get funds from the public and use those funds mm, for the expansion or the reasons where they are going to invest those funds. So the very important thing is the strong decision with a logical thinking or with a logical background to take why I need, and the problem statement why has to be answered at the very first stage, that the issue proceeds of the issue where I'm going to invest, and I'm very confident that this is very much required. With that, object of the issue, once it is finalized, then the process of IPO will start. Then So once the object or company wants to go for an IPO, then it is very important to know the intermediaries involved or the very important definitions or the regulators who will come into picture. One is the SEBI, that is Securities and Exchange Board of India, which is the regulatory authority. As long as your public company, if it is not listed or not going to be listed, it will be only Ministry of Corporate Affairs, ROC, or any RD, wherever, as and when it comes to the picture, like shifting of registered office or whatever, the mergers and all. But once we want to file offer document for issue of capital from the public, then it will be the SEBI, who is under the ownership with the Ministry of Finance. Then prospectus, a formal document required by the Securities and Exchange Board of India for a company to go for public. See, till I was preparing for IPO, or I never thought this prospectus would be such an important document. Generally, this document will be there in very small letter, but take my words, even a small dot will have its own meaning in the prospectus. So this is one of the very important document. Each line will be backed by the documentary proof, or some of the areas where it doesn't have documentary proof. For example, the industry trend wherein we will not be give any exact documentary proof. Those will be supported by an expert in the industries or expert opinion, maybe a firm or whatever, in writing and signed and sealed. And some of the statements will be approved by the board. Each and every line of a prospectus has its own sanctity and backed by a very strong proof. So this is one of the important documents. And securities market, as of all of us know, it is a market in which securities are issued, purchased, investors traded in the stock exchange, and NSE, BSE are National Stock Exchange, and Bombay Stock Exchanges are the two stock exchanges wherein securities will get listed. But when we have to obtain the principal in principle approval or start interacting with these NSE and BSE is immediately upon filing of a DRHP, means that is draft red herring prospectus, within immediately, that means within 3 to 4 hours, first draft red herring prospectus will be filed by BRLMs, because company cannot file any draft red herring prospectus directly with the SEBI. Then with immediately company has to file the RHP document with NSE and BSE. Then it has to get in principle approval for listing, or it has to get registered itself. That, as previous speaker Pracheta said in his SMA listing, here also you have to give lot many details for in principle approval with BSE and NSE, that is your 3 years financials. Then all the regulatory filings proof. Majorly they'll take your PF, ESI challenge, and sometimes income tax return filed, then rent agreements. Then they'll visit the company, wherein the visit physical verification, if it is a manufacturing, or if it is only a few places they'll have challenges where it is IT companies, then even then they'll ensure that the places mentioned in the DRHP are there, existed. See, either one exchange representatives will come, and they'll ensure most of the details mentioned in draft red herring prospectus are correct. Then they have to in turn give, as I understood, they have to in turn give report to SEBI. See, because in as all of us know, where in IPO the public money will be involved, it is not the list after listing BSc and NSc will come to picture. It is the moment we file our DRHP, the interactions with the NSc and BSc will start in various stages. First itself is getting ourselves registered, then getting in principal approval, for which the fees depending on the issue size, various there are different brackets. The issue size is less than 800 crores. This is the amount has to be paid. This will be bit depending on that. Before going for public, company should ensure to have all the funds also. uh, One important factors to be considered always. So, and at the RHP stage, because while listing company normally will get in principal approval from NSC and BSc, but at the stage of RHP or red herring prospectus, company has to designate one stock exchange as the designated stock exchange. It can either be NSC or the BSc, where the primarily the securities will get listed. So depositories, there are two depositories. One is NSDL and another is CDSL. And as I told in earlier, IPO price, there are two types of price. One is the fixed price issue, wherein the price of issue will be fixed in the initial book building. It will be fixed during the period for which the IPO is open. So here there is a set of process the company has to follow and fix the price. So there the company and BRLMs will be work together to close this. Yeah. Here another important thing is parties agreement involved in an IPO. First, when the company wants to go for an IPO, there will be many homeworks, wherein the first and foremost is to choose the book running lead manager. They are the key intermediaries or the party involved in an IPO and plays a very vital role in completing procedure of an initial public offer. See, depending on the issue size and various factors, we can choose the BRLMs, because BRLMs also has to agree. And here they are the one very key intermediaries. They will run the show. They are the one who has to means in BRLMs. They are the one who will filing the DRHP with SEBI and has to get certify various statements in the DRHP with that it is correct and while filing. So and here though nowhere certain activities will be mentioned, one of the very important factor or the point to be considered for company secretary is to get various certificates. For example, first is promoters qualification. I can say one example, promoter qualification that will be there in the UDRHP. Okay, for which how it will be certified, or how the BRLMs has to certify means while preparing for an IPO, what happens the moment company appoints BRLMs, then company has to make a suitable platform where it can have all the documents ready. And generally it will go with the virtual data room, wherein company will have one legal advisors and BRLMs also, and all the documents will be verified and that will be updated. So BRLM's role is not only limited as the definition, it is much more beyond what is mentioned in the definitions of BRLMs, or practically PC in general. And domestic legal counsel. So what happens is when the company wants to give the details, it has to be first vetted by the domestic legal advisors. So we have so many domestic legal advisor. It can be CAM or any or many industry law. So many law firms will be acting as domestic legal advisors, and they'll have their own legal experts. See why it is so important, because as all of us know, any misstatement or missing any important points, the penalties are huge. And we and to ensure everything is proper, or it is as per the act, so domestic legal councils are a very plays a vital role, and they'll guide from time to time on the various aspects which has to be complied. And the auditors, so statutory auditors, um, who are required to give the restated financials for 3 years. And independent chartered accountants will be appointed, because so many certificates to be obtained from the independent chartered accountants, including corporate governance certificates, uh, so many, maybe more than 50 certificates to be obtained from them, and each and everything they have to verify and give the certificates. See, whatever mentioned in the company's financials and board report, apart from that, as mandated by the law, we need to get the independent chartered accountant certificate. And industry experts are required to provide the industry's overview and certain parameters which will be included in the draft red herring prospectus. Later it can be in the RHP. And registrar. So registrar, company has to decide who can be the registrar. There are, it can choose any one of the. Sometimes what happens, company will change from the existing registrar to the new registrar depending on the issue size or various factors. Those things has to be taken care, and who is the registrar has to be mentioned in the draft red herring prospectus. And there will be an agreement with the registrar stating that they will be the registrar to the issue, and they have to give their consent, everything. Ad agency plays an important role during the DRHP and roadshows and all other matters. And ad agency agreement also has to be entered with the requirements. What are the requirements of ad agencies, do's, don'ts, and publicity norms? Everything will be detailed in the ad agency agreement. And registrar and share transfer agent, as I mentioned, it is one of the very important uh, compliance to be looked into. And the name, contact details, address, everything to be given in the DRHP and later stage in the RHP document. And see, it is a dream for all the companies to go for an IPO, and I'll be covering in my next slides the current trend. But everyone, can they go? Is there any regulations which says yes, it is? That is the SEBI ICDR regulations 2018 as amended, the SEBI ICDR regulations. So here the part A, schedule 6 of the part A will say what are the eligibility criteria. So here first they say, as negatively, it will say that issuer or any promoter, promoting group of directors or selling shareholders, they should not be debarred from accessing the capital market by the board. Board here means SEBI, it is Securities and Exchange Board of India. So they should not be debarred for accessing. That is one. It is not only the that particular company, even promoter group or directors. So this statement, okay, ICDR statement, as we see, okay, this is the definition. But I'll tell you, the moment we file our DRHP, immediately the stock exchanges, as I previously mentioned, we will file an in principle approval to the stock exchange. Then in there, they will see whole history, because we have to give the financials of promoters group. And BSC, if the already promoter is listed, they'll have 100, and they'll have their own checkpoints to check. And even any small document which is not provided in 20 years back also, they may come up with. So uh, those things are controlled indirectly by SEBI through its other arms, I can say. So this is one of the very important point to be considered if any company wants to go for an IPO. First, in its due diligence, it has to ensure that they are meeting this criteria, and also promoters, issuer or any of its promoters or directors is a willful defaulter. There should not be any willful defaulter. And fugitive economic offender. The promoter or directors shall not be a fugitive economic offender. And there should not be any outstanding convertible securities. So companies first should ensure all of these, and this is just not a definition. Before filing an BRHP, there will be a thorough due diligence uh, from the domestic legal counsel and legal counsel appointed by the BRLMs, as well as before approving the TRHP by the SEBI. These all points will be thoroughly verified and checked through various sources. Then only it will consider the eligibility criteria is met. Then what it should have is the 3 crore rupees net tangible assets calculated on a restated and consolidated basis in each of the preceding 3 full years, and average operating profit of at least 15 crore rupees company should have. There is a formula is there, and as per this definition it has to have, and it should have a net worth of at least 1 crore rupees in each of the preceding 3 full years. And if the company has converted its name, then 50% of the revenue should have generated post that. So as I mentioned previously, Regulation 7 of Chapter 2, General Conditions, it says, so company has made an in application to one or more stock exchanges to seek an in principle approval. As I mentioned previously, before approving the RHP, SEBI needs this in principle approval letter. It's not only like this definition says, they'll ensure in principle approval letter is submitted to the SEBI. Then all this, an agreement with the depository for dematerialization. Generally, companies which wants to go for an IPO will convert its securities, and now it is mandatory based on the various criteria to to convert the securities and have in a demat form. So all the securities should be in the demat form. Then any non-converted pairs to be converted. All those eligibility criteria should be met. Then management activities for an IPO. Till then, we have seen what is the eligibility criteria, but very important thing is management has to form a separate committee before going for an IPO to analyze the pros and cons and to see all the preparedness, because once the IPO is announced, then there will be a very tight timeline which has to be followed. So generally management, formation of separate committee is not a mandatory though. Generally management will form a separate committee to focus mainly for an IPO. Then that committee will give various recommendations. See, I have seen in many examples, after formation of a separate committee and went through, then companies choosing other route, maybe merger or slump sale or other demerger, then it need not have to be IPO. So this separate committee plays a very important role to give appropriate recommendations to the management. Then, as I mentioned, structure and options. What are the structures available? Is it only IPO, or can it be a something? It has to be backed by very logically reasons why this and why that. This separate committee will have experts or the people who are having the industry knowledge. Then they will make a thorough study, because once IPO or the decision gets announced and the preparation starts, it is like a big marathon, or in our say we can say it is a festival, uh, or whatever we can say, or it is a nightmare wherein we have to invest our time, money, and all the resources to make it happen. So this committee has to have a thorough understanding, and depending on the committee's decisions, management should take an appropriate decisions. And once the board reviews the recommendations, and approve the IPO, then the due diligence process will generally start. So in the due diligence, there will be lot many parameters to be looked into. And as we know, there are certain documents which we have to preserve for a long one, maybe merger documents. And though accounts or other documents, what we say, 8 years only we need not to have, we have to preserve. But for IPO, it's always recommended to have all the details of the company. And in the due diligence, it will be clear based on the secretarial parameters, accounting parameters, industrial parameters, then the company's risk factors, legal compliances, customer base, and any agreements, or the agreements which company will be having with the bankers. All those things will be verified, and after successful verifications, and once the board is having confidence, generally IPO kickoff meeting will start. Here it is a process and compliance requirements internally have to be signed off between the legal counsels and the company legal team. And compliance and governance, it's so important to have governance practices at that stage only. Once the company wants to go for an IPO, it may be a private limited company, then has to get converted into a public limited company, as my CS Pracheta told. There are so many committees and compliances to be looked into. All those practices companies should bring in or have make it ready, because it takes a bit time to adopt all those governance practices, which are very much essential for a listed company. Normally, I'm not saying it is a must, but generally companies will take 2 to 3 years prior step to have those governance practices, to adopt global governance practices, to align with the audit standards required, preparation of financials which are required, or recommended for an IPO, and to collate all the details with respect to the capital structure or all other things before 2 to 3 years, so that there will be a proper study and the grounds will be made for an IPO. Then here the important stage, as I previously mentioned, preparation and coordination at DRHP stage. Once the kickoff meeting starts, then company will have its own legal counsel, and the BRLMs or the investors will have their own legal counsel. Then generally company will appoint one project manager who shall coordinate mainly with the parties who are involved. They will create group email IDs for the smooth functioning, and company will have an agreement with this virtual data room, wherein all the files will get uploaded. Before any files get uploaded, it will be reviewed first by the domestic legal counsel, and after that external legal counsel appointed generally by the BRLMs. After that, all those documents will get reviewed. See why it is so important, because to save time and to have a proper communication. For example, a company wants to upload to give all the loan agreements. One thing I can say, then is it required to send it to everyone by email? Then email, there will be not many restrictions. But in the virtual data room, it will be huge space will be there, and all the people are who are designated for that particular project will have an email ID access, and they can access all those data depending on the mm, view option given. For example, company secretaries may have view option for everything, but all other financials or legal uh, department of the company may not have access to the minutes, because minutes is not a mm, mm, public document. So those restrictions will be taken care at the time of creating various view options by the virtual by the IT department of that particular company or VDR. So this is very important to have the coordination. Normally, group email IDs will be created, and that particular because the guidelines company cannot say until they file the DRHP, they cannot publicly say that they're going for an IPO, and it has to be only need to know basis. So the generally one project name will be given, and the people who are having that access only can access all those documents, and all the documents will be circulated through group email IDs, and for smooth and timely manner, communication in smooth and timely manner. And in the offer document, so there will be a three section. One is the business section. It is a very important section wherein the business means the industry overview will be given. If it is an IT industry, that IT industry overview will be given, or that few lines about that business or that particular company, when it started, what it is business. So the brief introduction about that company will be given in this business section. And risk factor. See, it is very important to know the risk factor of that particular industry, as well as the company which runs in that particular industry, as well as the inherent risk in that company, and maybe also in the business. For example, I'll tell one thing: risk factor in the electronic industry. And though there is a lot many scope in the electronic industries, but the volatility of this industry is concerned, it may be a risk, because company, as per the ICDR regulations, company has to give a thorough risk factor. And one more thing, company can say, from past 3 years, this in our profit is this much, and it's in a good trend, and but we cannot assure that the same in the future also. Likewise, whatever the probable risk in that industry or the company, it will be mentioned in that. Then industry overview will have that company particular as well as the industry as such. If it is a aerospace industry, then aerospace industries, then the government norms, then the past 3 years, the parameters which takes that overview, and the growth, and the current global market, how it is running, like that it will have industrial overview. And management discussion and analysis, wherein management will give all its views. Then non-business sector, it is one of the very important from regulatory and legal perspective. Here the role of company secretary plays a very vital role, because I'll tell you, capital structure of the company. If a company if a company is there for past 30 years, the capital build-up history has to be given. How the when the subscribers signed an MOA, what was the shares, from then how it grown. Each and every allotment details has to be given, including if any shares got redeemed or converted, each and everything to be given along with the documentary proof. If there is non-availability, then everything will go as a risk factor. And as all of us know, the moment risk factor increases, that makes weaken our offer document. Here, the role of company secretaries plays a vital role, because if a company is having 30 years of track record, then to get the forms filed for redeemed shares will be difficult. Then few allotment shares or few allotment resolutions may be really challenging. Before a kickoff meeting, it is as advisable to get all the documents ready. Generally, the companies incorporated after 2005, most of the documents are available in the public document of ROCs, but companies have got more than 30 years or incorporated prior to that, they have to search various sources to get, means ROC. If they have kept D file, we may have to rely on the D file, because I have seen either one or two challenges or many challenges will come while building a capital build up. This is one important. Then object of the issue. Here, the what is the object of the issue will be clearly mentioned. The first initial object of the issue what I referred is the management to have before IPO, but here the proceeds of the issue, how exactly it will be utilized. It can be for the expansion, or it can be for the repayment of a loan. It can be for the working capital requirement, or for other administrative purpose. If it is IT industry, for some reasons, if it is manufacturing industry to buy machineries. If issue size is 1,000 crores, how the issue that amount will be utilized has to be given. And regulations and policies, company, as I previously said, company has to ensure all the policies which are required for a listed entity. Company should make it ready and has to be approved at the time of DRHP filing. Then it has to be available in the company website. Then history and corporate matters. This plays a very vital role. There may be certain mergers which might have happened in 2007, or if the company to 1990. All those things to be properly mentioned in the DRHPR offer document, and it has to be backed by the documentary proof also. So this, and here one very big challenge will be uh, including challenge which filed 15 years or 20 years before also. We need to provide, unless we give a documentary proof. For example, yeah, it's very evident in the master data of the company that the capital of the company is this much, the registered office of the company is here, but it's not sufficient. We have to give all the proof that the capital has built up from here to here, and the registered office, that the form filed. If the shifting of the registered office, all the relevant filings along with the challan. It is not only the filings, or it is not only the documents downloaded from the MCA, but generally legal advisors will insist you to give all the forms along with the challans. And the directors, yeah, view signatory details of MCA will clearly shows these are all the directors and company secretary, CFO or CEO. But you have to provide all the filings, means DI 12 or previously form 32, if I remember correctly, that those things we have to provide to the legal counsels. Then promoters and group companies. Who are all the promoters and group companies? Those details to be provided. As I mentioned previously, promoter and group companies, there shall not be any non-compliances, or the eligibility criteria has to be met. Accordingly, If the company not defined the group companies, then just before or prior to the DRHP, the company has to pass a resolution and identify all those group companies. Then financial indebtedness, uh, along with all the banks and other details company have to give. Then outstanding litigations, the details of litigations, it may be a tax litigation or civil or criminal, all those bifurcations has to be given along with the filing date or application filing date with a documentary proof to be given. All the government approvals, if there is any pending approvals, for example, factory licenses, 3 months renewal. Renewals will happen 3 months prior. Those details, if we filed and we are waiting for the renewals, then we have to give all those details. See, on so and so date, we have submitted this approval and we are awaiting for those approvals. Then offer document. In this, another is financial. Normally, prior to filing of the draft red herring prospectus with the company has to adopt the restated consolidated financials, and that has to be approved by the board and the numbers to be considered in the DRSP document, and tax benefit statement also to be given. Then key performance indicators. See, this key performance indicator may, what is key performance indicator? It, that is the parameter which which allows company to go for an IPO, or which is the backbone of company. I'll tell, for example, manufacturing industry, customer base can be the key performance indicator, or a financial key performance indicator. Financials, yeah, we are having a strong financials, this one, and revenue and customer base. When we say key performance indicator is revenue and customer related KPIs, we have to provide all the details of the customers across the globe, along with the segments and the prehistory and the future plan. Prehistory also should be backed by the agreements what we are having, and along with the sales, and the future along with the agreements and the pipelines. Okay, just numbers cannot be fly in the air. So this is one of the very, very important parameter which the board has to approve, or it has to be approved by the audit committee, then board will ratify. So there are key activities for IPO. It is a DRHP filing, then SEBI interim observations. Once we file the draft red herring prospectus, then SEBI will come up with its observations. Generally, this interim observation will be issued only after we submit the in-principle approval from the exchanges, stock exchanges. So in their observation, there will, depending on the observation, they may ask for the more risk factor or any further documents with respect to the documents filed. If it is, it depends on SEBI and depends on the risk factor. Generally, interim observations will come from the risk factor is one thing, and the industry overview, but we cannot say which exactly can play a role. So SEBI on its discretion will give interim observation. Then and the parallel, what happens is when management will go for a roadshow and meet the investors, and will have their presentation, and ensure that, has to ensure that this issue will be successful, or try to ensure this issue will be successful. Then management will conclude roadshow. Then final observation. Once we give the interim observations reply, then we will verify everything. Then they'll come up with the final observations, and then approval of the after approval of the UDRHP. Then UDRHP means updated red herring prospectus. Then we have to file RHP with the. Then company has to file RHP with the registrar. After that, this thing. ROC, once ROC approves the RHP, then the pricing or the prospectus will come, and depending on the issue closure, minimum 3 days and maximum 10 days, company has to open the issue. then as per the various provisions of the law, because the time constraint I can't. So listing will happen. So until then, there will be many timelines to be followed, and there cannot be a single deviation, and there shall be a thorough verification of all the documents. Yeah, I'll take yeah, because we have seen so many trending IPOs trending, but what is an overview? I'll just take few. Yeah. So as per the Prime database, until January 5, 2023, I'll just give number of deals in 2016. IPO deals is 145 INR in billion. From 2016 to 2023, I'll give few datas. This is backed by Prime database source. So you can see the trend how it is. In the year 2016, from IPO deals, it is 145 INR billion. All the amount will be there in the INR billion. And secondary market, it is 434 INR billion. Then in 2017, it increased IPO deals 282, and secondary market is come down 254. 254 in financial year 2018. Then 888 INR billion in IPO deals and 1060 in secondary market. In FY19, 236 in IPO and secondary market is 342. Very less because all of us know it is a COVID year. COVID started there. Then see the trend, how exactly we can refer. In FY20, primary IPO deals is 227, but in a secondary market, 1245. Means so many people started increase the investment trend in FY20 and turned their face towards the secondary market. FY21, though IPO deals is 395 only, but secondary deals 1873 INR billion. FY22 again, it's 1250 IPO got increased, but secondary deals got to 695 INR billion. In YTD FY23 as of January 5th, IPO is 521 and secondary deals is 158. These are all few datas. So in FY21 and 18, we could see the increase in secondary deals huge. And in 22 and FY18, primary IPO deals got very good response. Then I'll take up a few precedents in Indian IPO issuance activities. Being in a Mysore, I'll just take first Keynes Technologies. Issue date is November 22, and in the listing performance, it got 32.6% positive, and even then written till date, that means on 5th January itself, 26.9%, means it is has got very good issue performance. Then another EMS Industries, that is DCX Systems, that is also November 22. Then it is 38.2% listing performance, but now it is a 4.2%. These are all backed by the Prime database source. Okay, then one of the major IPO what we were waiting and could see is Life Insurance Corporation of India. That is listing performance is minus 8.6%, and currently it is minus 23.4%. Then Adani, that is issue date is January 22, and it started with the listing performance of minus 3.9, and now it is with a very positive 149.8%. And few other MedPlus Health Service, because I'm taking one from other industries. It is issue date is December 21, and listed 30.7% of positive performance, and now it is minus 23.6. And Go Fashions, it is November 21, listed performance is 90.7, and now it is 68.8%. And AMI, likewise, various companies, someone performance is doing good and some are not in that great performance. Devyani Internationals, it is August 21 issue date, and it is with a positive performance of 37.1, and now it is with a 32.4%. Then what? Kalyan Jewelers, it is March 21. It is listing performance is minus 13.5, and now it is 42.1. Yeah. And a few Indian IPO pipelines which are going currently. OYO is the established deal sizes dollar in millions. These are all in millions. That too not in INR dollar. OYO is 1,125. These are all upcoming IPOs. Snapdeal 250. Yatra. These are all comes under internet or a technology company. Yatra Online is $130 million. Then industrial, I can take up a few examples. Vikram Solar is 260. Then Survival Technologies is $125 million. Then Global Structure is $63 million. Then if comes under consumer industry, Fab India is $530 million. Then Biba is $200 million. Sai Silk is 150. Then Pharma and Healthcare, Mankind Pharma Limited is 688. This is one. Aerox Technologies is $92 million. GPT Healthcare is $70 million. So basically, technology companies, industrial, consumer industries, pharma and healthcare, and others. Others, BBG India, Signature Global, Mini Precision. These precisions are normally used for electronic and manufacturing industries. Those Mini Precision is $120 million, and Avalon Technologies is 128. Like companies are trending, more than 80 IPOs are trending in India, to my knowledge, and these are all having a very good potentials as per their prospectus, and confident for an IPO. And to see, it is a various other sectors. It is not only limited to one sectors. Now trend is for an IPO, but depending on the various other factors also, SEBI will give the approval. Post that, the procedure will start. With this, yeah, with this, I conclude my presentation, and thanks to everyone and the organizers for giving me an opportunity to share few of my experiences.
Hi, everyone. Good evening. I'm Leena here from Women's Empowerment Committee. I will be the coordinator for the question answer session. And I think now the participants can raise their queries so that our speakers can take up the question answers. You can use the question answer tab on your right hand side, and from there we can take it up. The presentation will be shared. There were some people, the participants wanted this presentation to be shared. So can we, I think it can be shared on the KSCA, the main host, and then they'll share it in the email. Okay.
So since we don't have,
is there any questions?
I had the question which I started with. How 197 Communications Private Limited started incorporated into with 200 rupees. So that's question is still there. If anyone knows the answer, they can come out with the answer, if not a question. Yeah, we have a question. Parvati.
Just the question is to Parvati ma'am. Offer for sale can some non-promoters in any IPO?
Sorry?
Can the offer for sale be done by non-promoters in an IPO?
No, in IPO, as the terminology says, in the initial public offer, there will not be any non-promoter as such. So, or the member, for example, the person who is not comes under the promoter group, that can be done by the other non-promoter also.
Next question is, how long does the entire process generally take?
That is $1 million question, ma'am, because it depends on the preparations and the availability of data and the coordination with each department, and also approval of regulatory regulators. For example, everything, for example, once the financials is approved by the board, then it will have its own validity. Within that, that milestone has to be completed. If not, again, it has to happen. Then certain times, BSc, 10 companies having 10 locations, and company would like to, or the stock exchanges would like to visit all the location. Then it depends. We can't say, but very minimum to minimum. As per my experience, 6 months is a very minimum period.
Okay.
After kickoff meeting.
I think that should answer the question. Parvati ma'am, the question is, basis of allotments are as per described under ICDR or board of directors?
No, it is the basis of allotment is how we have, is it IPO, a fixed price or book building. So company has to have a valuation. It can't be like ICDR is having procedure how it can be, or it can be various parameters, Income Tax Act, Companies Act, everything to be seen. Just ad hoc price cannot be fixed. It has to be based on the valuations, and board has to approve this is the price band within which it has to be. To have that price band, it has to have various parameters to fix it. I cannot just fix 10 rupees with a premium of 700 rupees. As Pracheta said, there may be a rights issue or bonus issue. While converting those, all the parameters to be seen, then the basis of the price will be decided.
Okay. Next question is profit track record must for 3 financial years?
Yes, to my knowledge.
SME listing, there is a specific requirement like BSc and NSC, they have separately mentioned 3 years track record of either the company, or NSC especially says either of the promoters, or so there are options available. It is not 3 years of the company mandatory, but there are 2-3 options available both in BSc and NSC. So you can find out in the website. So there are different options available.
Next question, for object of IPO, are there any restrictions?
It has to be logically okay. Now, object of IPO, I will say working capital requirement. So while saying working capital requirement, I should have the pipeline. So where exactly? Currently in my reserves, I am having so much of money, then I cannot say this fund is required for working capital requirement. So it will be on the practical basis. When company takes a debt, or in company's balance sheet, this debt is there, then equivalent amount I can show for the repayment of debt. Then expansion, to say I want to expand my business, uh, that can be put it. No one will see in the DRHP, but legal counsel and domestic councils will see, yeah, show me your expansion is, show me your promoters or promoter group. Where are you are having a business? Where exactly? Show us the agreements you're having with the customers, or uh, potential or any share purchase agreement which you, those are everything backed by the documentary proof as well as the track record. Then it will be put it in the DRHP or the RHP.
Someone has put something on the chat.
Tina, please check the chat box also.
Yeah, yeah. What could be the overall expense size for an IPO via SME platform?
SME platform, see, it all again depends on your merchant bankers, etc. Though the initial listing fees and all is lesser, somewhere around 25 lakhs can be, that's where we can start SME listing.
General corporate purpose shall not be more than 25% of IPO proceeds, right? She wants to confirm. General
That is correct.
purpose
That is correct.
shall not be more than 25%.
Yes, that is correct.
Pracheta, somebody wants you to repeat the question that you had asked earlier.
No, I was just wondering, when I started researching on this, when I looked into Paytm's DRHP, that is 197 Communications, they have incorporated the company with 200 rupees. So till recently, we had the requirement of minimum paid up share capital of 1 lakh rupees for private companies. So I just posed that question. How you think that they were able to do for 200 rupees? That was the question which I posed.
The 1 lakh private share capital was actually even changed, right? For some time.
So that was changed only after the New Companies Act has come into picture. That is somewhere in 2014 or 15, it was removed. So this was a company which incorporated in 2000.
Okay.
So then if I can give out the answer, when I checked, actually that 1 lakh requirement came in the year 2000. Just a whisker, actually. On 13th of December 2000, the Amendment Act came into picture where they introduced 1 lakh. And this company got incorporated on 18th of December. So I don't know, maybe they filed incorporation before only, therefore they got the approval, though the act had come to notify. So I just wanted, I checked that.
To add on, Pracheta, many companies got incorporated with 20 shares for 2000, total 2,000 rupees in 1993, 1994, we could see.
No, but that is only once if the company was incorporated before 2000, or if the company is incorporated after 2015 when the requirement was removed. In between, companies have all, if we have seen, it is 1 lakh only.
I think we covered all the questions. Any more questions, anybody?
I just want to thank the KSAA for giving this opportunity for us. Thank you so much for allowing us to share our thoughts and for allowing us to go deeper into the subject and learn ourselves. So it has been a great learning experience. Thank you so much.
Yeah, I also echo the view of Pracheta and same feeling here. And thanks to KCA and all the participants. Once again, thanks.
I would like to present a vote of thanks. A big thank you to our dear speakers, Pracheta ma'am and Parvati ma'am, for taking out time from your busy schedules and making this event successful and bringing a lot of insights on this preparatory framework for an IPO by a private limited company. And you kept the audience very interactive, and they especially your questions and it kept them ongoing that, so this kept the session more live. And I also extend my thanks to KSCA, the Women Empowerment Committee, the Corporate and the Live Laws Committee, the technical staff, the participants, and the event organizers for organizing this event. And I sign off and goodbye. And I would just like to thank everyone to be here and have a great evening now.
Thank you.
Thank you.